Today's buyer's market is the perfect opportunity for first-time homebuyers to find the house of their dreams at a reasonably low price. It is, after all, a buyer's market out there, which means that homes are selling near record lows and interest rates are also remaining low. The number of houses on the market are at an all-time high due to the earlier poor economy, and many people are either selling their homes in short sales or banks are taking them over in foreclosures. These are all good things for home buyers, and first-time home buyers who can qualify for loans have the perfect time to act. However, there are many typical mistakes that first-time home buyers tend to make. You want to make sure to avoid these common mistakes. First off, you need to realize that this is probably one of the biggest decisions you will make in your lifetime, and one of the most expensive. Your first step is making sure you shop around for a buyer's agent that you fit with, one who understands and listens to your needs and is willing to put the time and effort into making your dream come true. Your realtor is probably one of the most important aspects of your buying plan. You want to be able to trust them and let them handle things with the knowledge that they know what they're doing. However, keep in mind that some things are simply unavoidable and snags will happen even in the best well-planned out scheme. Most of all, don't hesitate to ask questions. There is no question that's stupid. All too many times, realtors see people so excited and happy to get into the action of finding their dream home only to be turned down by the bank. You can avoid wasting time looking for a home that's not in your price range or being turned down for a loan due to credit issues by simply going to a lender and getting pre-qualified. While pre-qualifying for a loan does not guarantee you will get the loan, it is a fairly good indication that the loan will pass for the amount you have pre-qualified for. Don't have your dreams dashed by not preparing ahead and knowing that you truly are able to obtain a loan and how much a bank feels you are capable of paying back. Get pre-qualified and avoid wasting time along with disappointment. As exciting as it can be to start building up your furnishings and items for your new home, you may find that your dreams take a whole new about face when you find a house that hits you just right. Simply put, wait to fill your home until you have your home. It can save you a lot of time and possibly money. While you may have figured out financially by budgeting every penny that you can pay a particular amount for your mortgage, you have to remember that there are other costs associated in buying and owning a home. Each of these costs can add up and throw your budget off in an instant. Keep in mind these other costs associated with being a homeowner. You either want to assure your taxes are rolled into your monthly payment or make an adjustment to how much you can afford for your mortgage plus your tax base. Along with that, be prepared for tax increases that can happen while you own your home. Some repairs can hold off, but certain home repairs such as things like hot water tanks, a broken pipe, or a gas leak are emergency repairs that you will have to have the ability to pay for right away. Homeowners insurance. While some people have the sense to carry renter's insurance, this is substantially lower than carrying homeowners insurance. Some mortgage companies will roll this into your monthly mortgage payments, while other lenders carry nothing but your mortgage and won't add any other costs such as taxes or insurance into the payment. Higher utility bills. You are probably paying utilities for a much smaller home or apartment than what you are going to be buying. This means that it's going to cost substantially more to heat, cool, and light your home now. Expect higher utility bills when you buy a home, simply because you are providing utilities for a larger space. You will also want to consider possible maintenance and homeowner association dues. Many times, people will scrape together every last penny to their name in order to get the down payment they need. This is one of the biggest mistakes first-time homebuyers make. Leaving yourself with absolutely no money left to pay for things like moving expenses or emergencies is simply living on the edge. One small catastrophe and you're stuck with no money and no way to handle it. Why would someone use every last cent to put down on the house? The biggest reason is to obtain the 20% often needed for a down payment. Many lenders will allow you to not buy insurance with 20% down on the home, but the reality is that if a tragedy of any type should strike, you are truly playing against the odds. So now, you not only made yourself completely broke, but you're not covered by insurance, and you have no savings to fall back in case of emergency. One of the most important things to keep in mind when you're ready to buy a home is that your credit and credit rating is going to be a determining factor. Part of your credibility is the ratio of your income to your debt. So if you suddenly go out and incur a large amount of debt, it's going to work against you. In all honesty, you're probably best to wait to see what additional debt you incur as a homeowner before taking on two large loans in a short amount of time. Wait to make any large purchases or open any credit cards or lines of credit until after you have signed everything on the dotted line and moved in to your new home.